Good morning, Eric Stone here with Stone's Bookkeeping, and let's talk some more about the basics of taxes. I am your biker bookkeeper, and I am a faithful believer in Jesus Christ. And what I want to share with you today is on state and local income taxes. So, first, before we start that, my usual disclaimer: this is not intended as tax advice. Please consult your tax preparer if you have questions about what I shared today. If you don't have a tax preparer, my information will be down in the comments. So please contact me there and I will be glad to help you. So, as you get your first paycheck, as we talked earlier, you have withholding. So you think you're going to get all this money and then you get a whole lot less because your employer sends a whole lot of it to the government. So, we've talked about federal items. Now we're going to talk about state and local. So, most states, and I say most, have income taxes, okay? There's some that don't, and the ones that don't, I'm talking about South Dakota, Texas, Washington, Wyoming, Tennessee, Alaska, Florida. Really, the most populated ones of those are, of course, Texas and Florida. Several of those states are rather sparsely populated, but that's not really relevant to the discussion. So, as you get that paycheck, they take out money for federal, they take out money for state, and some places even have county and local income taxes. These are major big cities like New York City. So, essentially, your employer sets aside that federal income tax amount, and as we talked last time, Social Security and Medicare, and then they set aside money for your state tax obligation and perhaps local. But we'll just talk about state and just understand there may be local as well, and just we'll kind of talk about them together. So at the end of the year, you file a federal income tax return, and then most softwares prepare a state in conjunction with that. Also, if you're doing it by hand, you can prepare, a state and a local if you need to, but most people don't prepare by hand anymore just because the softwares are relatively cheap and incredibly easy to use. So if you're using a preparer, they're going to do your federal, they're going to do your state, and just understand again, you have withholding federally, and then you have withholding for the state. So as you file those tax returns at the end of the year, you may get a refund, federal and then state, and those are two separate entities that tax you. So you may get a federal refund, you may owe money to the state, and vice versa. You may owe money federally, and then you get a refund from the state. Typically, they're in conjunction with each other. Usually, the state is a lesser amount than the federal. And what I mean is, like, if you owe 1,000 federal, you might owe 100 to the state. And those are just really basic examples. Again, not tax advice, just some images to put in your brain as you're thinking about the two separate adventures. So, as we're talking about this again, basic tax stuff: federal income tax, state income tax. And you have to file both of those if you have a state income tax in the state that you live in. And you may have local, but like we said, don't worry too much about that. It's somewhat rare, mainly big cities. So, that's the fun thing for today. If you thought you just had to pay the IRS, you're probably wrong because you also have to pay your state. So, sorry about that. That's just a little more money out of your pocket, but that's how we have, they say that's how we have roads and schools and whatnot, but we had all of those before they started doing income tax. But that's a subject for a different day. So, again, we're going to be covering tax basics here on this thread. So if you would, before you leave, please like and subscribe so you get all the updates as I upload them. And let's continue to learn more about taxes. Thanks, guys. Have a great day.